All right, we're live. So I just wanted to just jump on here, and it's been about a week since I looked at the markets. I kind of took the last week off, and the best way that for me that I analyze the markets is while I'm teaching. So I'm just going to be the beneficiary of that. But I just want to jump on here also to add value, maybe clarify some things with people that want to know how to trade, want to know what they're looking at when they look at the markets and different things like that. So let's just jump right into it. So the way that I look at the markets is, one, I like to simplify things. So what you're looking at now is just a trading strategy set that I created. That basically all it does is just makes market structure and price action easy to comprehend. So I can do it without the indicators, but I just think, people have kind of the wrong idea with indicators. The way that I look at it is just a way to lower the amount of information that you have to process. And if the indicators can process information for you, then they work for you. But if they're taking away what's important to the markets, what's important to you making correct trades, then that's when indicators get in the way. But as long as you can find something that is lowering the amount of information that you have to process for your own strategy, then that you're using the indicators in the correct manner. So let's just get into it. Just to kind of briefly go over the way that I trade, even without indicators, I'm more of a market structure trader. So I look at price action, the structure of that price action. There's three components of any strategy: trend, structure, and momentum. Every strategy has a combination of this. It uses that, and I guess puts that into effect when it comes to that strategy. Any strategy, really. It could be a counter trend strategy or a trend strategy. It could use structure at lower points, or it could use structure at higher points. And the trade is always confirmed when the momentum is in the favor of that trade. In an uptrend, it's basically higher highs and higher lows. You're going to see that everywhere you go in an uptrend. If it's not doing that, it's not an uptrend. Downtrend, you see lower lows, followed by lower high, followed by lower low, lower high, lower low. As long as that's happening, it's a downtrend. Now, what confuses most traders is that when you have, all the, I guess, noise of the Forex market, it's hard to determine your trend, without kind of zooming out and kind of seeing if it's making higher highs and higher lows, or if it's making lower lows and lower highs. And then that's just for trending. You got to figure out what the structure is, if there's any Forex patterns being generated or any price levels to pay attention to. So when it comes to all those things, sometimes for newer people, that's harder to grasp without an indicator. For me, I like using indicators just to be able to see what I want to see faster. And if I can see what I want to see faster, then I'm winning, because that means I don't have to trade as long. I don't have to second guess myself. I can see what I want to see and keep going. So if we go back to this, when you're buying, the idea is not to buy here like all the newbie crypto traders. They see a high and then they buy at the high, and then it dips and then they sell. So lost money there. And then they lose out on this. And it's like, oh man, I should have bought. They buy here. And it's just this repeated pattern over and over again. Don't trade like, newbie crypto traders or investors, whatever you want to call them. The way you buy is you buy at the lows and you sell at the highs so you can catch the longer move. In an uptrend, the up move is going to be longer than the down move. The downtrend, the down move is going to be longer than the up move. So to catch the move at the best point, if you're buying, you want to buy at a low point. And if you're selling, you want to sell at a high point to follow the trend. So that's basically how I trade. It's as simple as that. So what I use this for is to basically lower the amount of, I guess, analysis that I have to do. If I just take that away, if I take that away, now it becomes a little bit more congested. It becomes a little bit more that I have to look at. Now I don't know if it's an uptrend or a downtrend. Based off of that high, I could assume it's an uptrend, but I have to kind of look at things a little bit clear, a little bit more in detail, and kind of map things out. And the way I trade is about efficiency. So if you can be efficient in what you do, then you can make clearer and wiser decisions. But let's say if I was to do it without indicators, which I can perfectly do it, you just simply zoom out. You may have to go out a time frame. And simply find the trend first. So the trend, you can see it's an upward trend. So trend is checked. The second thing would be structure. Now, structure, you can do it in a couple of different ways. You can use just the price levels to where you see where these, I guess, highs are being created, or these taps on the market. You can identify that as an evident piece of structure and mark that out. You see where it's making common areas there, here, 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 and here. See that little line, if you see this, follow this crosshair, you can see that there's a lot of action happening when price touches that line. So that would be a clue of structure. So now, you have an idea of trend, you have an idea of structure. Now, if we go closer to current markets, you want to see where the momentum starts. So if I look at, you got trend, structure, momentum. So where would you consider momentum to be happening in the markets? It's where the larger moves are made, or where the larger moves start. So the move that comes into mind immediately would be this move here. So that would be a momentum move because it went straight up. This right here would be a momentum move. It's because the markets are decisive in where they're going at this particular time. So if I map out the momentum, of the markets, then I can find areas where momentum likely starts. Because everybody has, what they consider support and resistance. The way I consider it is where structure and momentum meet. So if I go, let me actually go back. If I go and mark up where that point started, the momentum started here, right in this area. Let's see if I can make it bigger. The momentum started there. And then for this up move, the momentum started here. Now, a lot of people don't teach where something starts, because where something starts is where strength is. If you think about it, it takes a lot of interest for the markets to move. So a lot of people, they teach, to pay attention to where the momentum stops. But why would you pay more attention to where the momentum stops instead of paying more attention to where the momentum begins? So if you identify those points in the market, then you can have a better idea of where the interest lies, because you want to trade with the larger interest, and not necessarily the massive interest, but the mass meaning money, not necessarily people, because not everybody, the majority of people don't really do well with trading, but the minority are the people with large accounts, the institutions and things like that. And you want to pay attention to where those moves are happening in the markets. Do it one more Got one more here. So you see, that's where those moves are happening in the market. So now I can take this away. So that way it's less stuff on here. So you see these moves happening there. So now you want to look for where trend and momentum meet. So if I already identified the past momentum points here, I want to see if there's structure at that momentum point. So I would simply see here, there's structure, prices, finding a support or supply zone here, or a demand zone more so here. You know, price finds the demand zone, you see right there. Found a supply, and that supply turned into demand, or people call it resistance, turned into support. Supply and demand is more of the real term. So you got there, supply, demand, right in here. Supply, demand here. So as you see, you can mark up the charts, with the right amount of knowledge, looking for trend, structure, and momentum. It's basically what it comes down to. So if you can mark up the charts, but you can see that it takes a little bit more effort to do it, to the naked eye. Very clean chart, very clean markup, things like that, but it takes more effort. And to do that for multiple pairs, it could be a lot. That's why a good teaching, a good saying is to stick with just a few things, so you can take this type of a breakdown on maybe a few, pairs, to where you don't have to tire yourself out. But if you want to be able to trade more things at once, you have to find a way to make it more effective. So for me, I can see everything that I just marked out in one view. I can actually take that away. Well, I can leave it there. That's fine. So I can see everything that I marked out in one view. So if I look at where those arrows were, I can see that the market is dipped. So you see that it's an uptrend. You got the green here, you got green here, you got green there, all green. So you know it's an uptrend. And then you notice where I'm gonna use my vertical line, where the premium entries would be where there's lower points here. So this is how you use indicators. You use it to confirm your price action strategy, or to make it easier to identify. You don't use it as a strategy. You use it to confirm what your strategy is in a faster pace. So you see how everything lines up. The market dipped, got close to this line here. Also became low on this little indicator set. So it shows you're buying the lows. Just like I mentioned with that diagram up here, you're buying the lows and selling the highs. Trend, structure, momentum. And the momentum for me is when price crosses above the white line. So the momentum is confirmed after. So it's trend, structure, momentum. So I see trend, I wait for structure to be created, and then I look for momentum. It's as simple as that. So you got there, you see here, trend, structure, momentum, keep going. And you can literally keep doing that over and over again. So it makes it easy for you to do your strategy, whatever your strategy is. If you were trading, harmonics or different things like that, you can use indicators to help you confirm what you're looking for. But that's that. So if I go back to the live chart, move that out the way, go back to the live chart, I'm just looking for the same thing as I saw in the bigger charts. So simply here. So see that there is some structure in this area right here. So I'm just looking for the market to dip down here and potentially continue its trend. Or it can break the structure, because you never want to try to be like one-sided with the market. It can break the structure and confirm something on this side before going down. And the market will tell you what it's going to do. You know, you see the trend, you look, you wait for structure to appear, and then you're waiting for momentum. And when that momentum happens in alignment with the trend and the structure, you take the trade. If the momentum doesn't happen in alignment with the trend and structure, then you don't take the trade and you wait for trend and structure to be in alignment with momentum. If you do that, you know, trading becomes more simple to you. Trading is never easy because of the emotional aspect of using your money or the risk of losing money, but it becomes simple when you follow the rules. So let's look at something different. And then, you know, you see how this is kind of red and green, you know, so right away I can see it's a sideways market. You know, so if it's a sideways market on this time frame, what I can do is go out to a bigger time frame and see if there is more evidence of trend. So on the bigger time frame, it's downtrend. Let's see if it matches up with the smaller time frame. So the smaller time frame, still sideways. So it's a sideways market on a smaller time frame, but it's coming from a down market on the bigger time frame. So one way you can take a look and do it and look for is you can look for your high points here. And this is what I mean by that. So right now, it's kind of in a mid move right now. So if I was to take a trade, that trade would have been here. So that trade happened and it's in a sideways market. So what I'm going to do now is, because there's no clean entry to be seen from where market is at right now, I'm going to look for a scenario where a better entry can be formed. So what I got to do is wait for trend, and trend establishes itself when structure is broken. And always remember that. Trend establishes itself when structure is broken. Let's do this. That's a better level. So now I got this level here. So now, because it's in a sideways market, there's ways to trade it, but I'm not going to go and be too complicated with trading sideways markets. So the simple way is to wait for trend to confirm itself by breaking structure, because everything is in alignment. So now all I'm going to do is simply wait. This is for EuroCAD. I'm just going to simply wait for the market to show me what it wants to do. And then once the market shows me what it wants to do, then I can continue trading my strategy. Let's pick another one at random. Let's do GBP JPY. Already did again, pair. Let's break it up a bit more. GBP USD. So GBP USD. So mostly an uptrend, kind of losing momentum because it's in a sideways. So it's coming from an uptrend. Now it's trading sideways. So now, if you're more advanced, you could be looking for a possible reversal by looking at the bigger moves. So you see that this point here was a high point. If you go back into the smaller time frames, you can see that the market, and I'm kind of teaching reversals at the same time, you can see that the market is making higher high slightly. I mean, making higher lows, but it's not making higher highs. So that also tells you that the market is losing momentum. It can gain momentum and continue forward, but until that happens, you can go with the notion that the market is losing momentum. So now you wait. This is right here is a waiting game. It's not a clean, there's no clean entry at this point, at least from the strategy that we're trading. Some people could say, well, all this stuff happened here. If the market goes back up here, just sell it. I mean, you can be okay trade, but you don't know for sure because momentum hasn't, you got trend up, you got structure pointing down, but momentum is still up. So if you kind of, if you're trying to confirm a trade, let me kind of visualize it for you. Like I said, every strategy is a reflection of trend, structure, momentum. So if you were judging a trade and kind of doing a confirmation on a trade, you would simply, grade the three keys to it. So you got trend, then got structure, trend, structure, and momentum. So you could literally just sit back and grade a trade like this. If you're ever trying to debate a trade, to do it, to kind of take the emotions out of it and be more systematic. So what is the trend right now? The trend is still up. Now the structure is pointing, if I can get it. Now the structure is kind of insinuating to the downside. Not quite, but it's more so turning to the downside. But the momentum is still up. So because you have an incongruent analysis, you don't take a trade until everything is congruent. So how would things become congruent? Well, the structure can be broken, and now if the structure is broken, then you can turn this. You can change your evaluation of it and change it to up. But let's say if the market goes down and starts to break structure, you see the momentum changing, then you can see that you can give it a different evaluation because you see trend changing and momentum changing. So if trend changes and momentum changes and structure is still downward, then now you have congruency in your analysis and you can make your trade. That's how you keep things simple. So I hope that this was helpful. If you definitely want to, I guess, expound upon this and kind of look at this style of trading a little bit more, message me. And I have it in a couple ways that you can basically get access to it. So hopefully this helped out. Y'all have a great night. If you're trading, good luck with your trades. Stay with your strategy and don't fall for your emotions. Y'all have a good one.